I recently called ADA to 33 cents, but here's what really happened and here's what we learned from it. How's it going, everyone? My name is Jake with Trade Confident, and today I'm going to be talking to you about that ADA call that I made on October 24th. With that, I'm also going to show what we learned, what we could have done differently, and what actually happened in the market to cause this massive market-wide pump. Let's get started. Right here is the ADA chart. Now, on this red dotted line here, this is October 24th, and this white line right here represents that 33 cent level I had predicted. The reason I had predicted it was because we had a sell signal while we were near the descending resistance line on this descending channel pattern. We also saw confirmation from the trend exhaustion and price versus well money flow. Under typical circumstances, this very likely would have moved down to at least 33 cents, if not structure support on the descending channel, as it had previously multiple times, as you can see back here. But obviously, that is not what happened, so let me show you. What actually happened was we saw a breakout of the descending channel. Now, this was actually a market-wide pump, and I will be showing you the rest of the market later on in this video, so stay tuned for that. But here's what happened on ADA specifically. We saw a jump up with the wick close at 41 cents, and it wicked up at the top to about 43 cents. As of right now, it is trading at 40 cents and maintaining a structure support there, though I don't think that will be lasting very much longer. And stay to the end of the video to see why. So at this point, I'm going to show you using the macro metrics on the tradeconfident.io website and show you what actually caused this pump to happen, where all the money came from, and just what caused it. This morning, I was taking screenshots for the metrics. This is actually yesterday's. This was updated on October 25th. You can't see it. My face is hiding it, but take my word for it, this was yesterday's. You can see right here, we saw a $901.581 billion market cap. This is where we were yesterday. And this right here is the updated chart on the tradeconfident.io website, last updated this morning, October 26th. But you can see right here, it is now $959.143 billion. This comes out to a total of $57.562 billion added to the crypto market in less than 24 hours. That is absolutely insane. That is nothing to sneeze at, guys. Almost $58 billion in less than 24 hours. So we have the whales to thank for that. This is another thing to pay attention to. This comes from coinglass.com, but this shows in 24 hours, $758 million were liquidated from the crypto markets over a 24-hour period. You can see right here, this comes out to 104,659 traders liquidated, with the single largest one being BTC USDT at a value of $1.93 million. One person alone lost $1.93 million in this 24-hour period. These shorts were likely at around this area between 19,683 all the way down to about 19,200. Somewhere in this range is where most of these traders were liquidated. I don't think anybody expected for the price to surge past this point, and as it did, it liquidated tons and tons of traders. So this combination of over $57 billion added to the market in a 24-hour period, along with over $700 million worth of short trades liquidated in that same time, combined to cause the crazy pump that we saw in the market over the last 24 hours. At this point, I am going to switch back over to those metrics and show you what we could see coming soon. We can see Bitcoin had a small dip in short trades right here. Long trades stayed pretty even, but on Ethereum, we can see much more obviously here, big move down for shorts. This shows that massive liquidation, and long trades saw a move up as well, correlating with the price. Ethereum and Bitcoin dominance both rose, with Ethereum seeing a massive gain over the past few days. Bitcoin saw a small dip as Ethereum lifted, but Bitcoin again saw a move up along with the correlated price over the last 24 hours. Now, I just showed you this again, $959 billion total market cap to show $57 billion added to the market. But an interesting metric right here is that stablecoin inflow and outflow shows a massive decrease in market cap for both USDC and USDT. You can see here the market dropped in the same period of time time that other cryptocurrencies rose. This is because people traded their stable coins for regular cryptocurrencies, and because of that, we saw a big move down in stablecoin dominance. Now, these 9 metrics alone are absolutely amazing and will help you crush the markets. These give absolutely amazing outlook of the future of different cryptocurrencies. Legacy members will remember these, but we have brought them back. So if you want access to these 9 macro metrics along with 40 trading metrics for individual coins and stocks, be sure to join the membership at the link in the description. It's only $75 a month, guys, and our traders are doing absolutely amazing with it. So I showed you what actually happened and what caused the market pump. At this point, I'm going to show you what we've learned and what we could have done differently to predict this trade. So right now, let me show you this real quick. This is Bitcoin. For those that don't know, most of the cryptocurrency market is very closely correlated with Bitcoin. It won't be exact percentages or anything like that, but generally if Bitcoin moves down, the rest of the market will too. If Bitcoin moves up, the rest of the market will move up. And we can see that right here. Bitcoin moved up and pretty much every other coin is in the green. Crazy enough, Travis actually predicted the $20,500 level in previous videos. He actually absolutely nailed it, and he based it off of this descending triangle right here. Now, I won't go over it too in depth, but take my word for it, the last 4 descending triangles that have showed up on Bitcoin broke out to the top side. Now, I know most people feel that the descending triangle is a bearish sentiment, and a lot of the times it is, but the last 4 descending triangles that have shown up have proven to be massively bullish. And again, it played out right here, so that makes 5 in a row. He called the upward movement and the breakout here because the buy signal happened as the descending triangle continued to get close to closing. We had multiple touches on the descending resistance, and of course, the more touches you get, the more likely it is to break out. After this buy signal, and because it was the last signal before a breakout, we did expect it to break to the upside. On top of this, the trend exhaustion was decently low on his chart, and the price versus well money flow was pushing up. Typically, all of these in combination next to a resistance means that we're going to break to the upside. Now, we saw a breakout and we saw a retest, and on that retest is generally where we see that bounce, and that is exactly what Travis called. We saw that and it exploded upwards. Switching to the 1-day time frame now, we can see this was confirmed. Buy signal right here with trend exhaustion and price versus well money flow very low on their charts while still very close to that descending resistance line. And again, it resulted in a breakout, retest, and break back up. But at this point, let's check to see what ADA itself did and where we could have predicted differently. Here's what I'm seeing for ADA. I'm on the 4-hour time frame right now, but we see this descending triangle, and most often this does break out to the upside at some point. Now, we did get 4 touches, one right here, one right here, one right here, and one right here. We got buy signals on all 4 of those, which is awesome to see. But on the 4th touch, again, the more touches you get, the more likely it is to break out. And that's exactly what happened here again. The interesting thing is we got a sell signal, and that is what I predicted the call to 33 cents on. But if we go to the 1-day time frame, you can see that there's actually no such signal, but the strong buy and regular buy signal was still there. What I've learned from this, and this is something I need to remind myself a lot of, but when trading, you should always use a larger time frame than the one you're actually trading on to look for overall trends. If the larger time frame doesn't confirm the same sentiment, then it's very possible that the 4-hour time frame just isn't going to work out as planned. Now, on the 4-hour time frame right here, let me switch back. We did see a little bit of a move down. The sell signal was normal. It saw a tiny bit of a move down, but on the 1-day time frame, you can see that the bullish sentiment was much stronger over here. The price versus well money flow had been at the bottom for some time. The trend exhaustion had bottomed out somewhere over here and was slowly moving up despite the price moving down. This shows extremely bullish divergence when this happens. If you see the price falling with the trend exhaustion price versus well money flow moving up, typically prices are going to see sharp moves up to follow the trend exhaustion price versus well money flow, and that is exactly what happened. So again, to repeat that, following sentiment on the 1-day time frame showing larger trends in the market will make you a more successful trader even if you trade on lower time frames. Making these confirmations will make you even more sure of better signals, and this is something that I could improve on right here, and I'm going to do for future trades as well. So the main lesson we have learned in this video, we need to pay attention to macro metrics pretty much all the time. Even if you're trading on lower time frames, seeing the overall trend of the market, seeing where the market as a whole is heading instead of just a small snippet of the market is extremely important and will help you become a more successful trader. In our case, we usually trade on the 4-hour time frame, so checking the one-day charts will help us get a better overview of the market as a whole. Now, these macro metrics also include the metrics you saw on our tradeconfident.io website. Those macro metrics will show you much bigger versions of the market. It also means following the big tokens in the market like Bitcoin and Ethereum and seeing what they're doing, because most often the rest of the market will correlate to moves from Bitcoin and Ethereum. Next, we need to trust these patterns and especially how the indicators are correlating with them. If we are near a resistance, but the trend exhaustion price versus whale money flow and TC top and bottom finder are showing a likely move up, this means that we are very likely to break out of that resistance and see a giant pump. Now, before I finish this video and show you where I think ADA is heading next based on everything we just learned, let me talk to you about our indicator sale. It is ending in 3 days. Now, this is the cheapest you will ever be able to get our indicators. They are on sale for up to $450 off. Let me show you how to get access to them. First, what you're going to want to do is click the indicator link in the description. These will help you time breakouts for markets. It'll show you where the markets are going to go. They are absolutely amazing, and you don't have to take it from us, guys. Check out what other traders are saying. This guy made $950 in 1 day, $4,300 in just a week, $500, $5,200, $4,300 in their first 3 trades using these indicators. Again, this is our biggest indicator sale yet. Again, 3 days left. What you're going to want to do to get the best possible deal is snag the bundle pack first at this link using coupon code SAVEME50 for $50 off. This will come with 9 of Trade Confidence indicators, including the price versus whale money flow and trend exhaustion that you saw me use in this video. Now, the best part about this bundle pack is it includes a $400 off coupon. That's where that $450 comes off. What you're going to want to do is after you buy that, come here, buy the TC top and bottom finder using the coupon code you see in the bundle pack to get access to all 11 of Trade Confidence indicators for the cheapest price possible. You guys got 3 days left, so hurry up. You don't have much time. If you want to grab these indicators, now is the time to do it. With that out of the way, let's talk about where ADA is going next. Let's take a look at the largest coin in the market, Bitcoin, first thing. So right now we are waiting on a sell signal from the TC top and bottom finder. At that point is likely where we're going to see the move down happen. Trend exhaustion and price versus whale money flow are high on their charts on the 1-day time frame, showing that we very well could be moving down soon. We do have a little bit room still to move up, so we could see whales push up a little bit more, but I don't expect it to be very long-lived. And I think through the weekend we're more likely to see a move down. Now, if that happens and Bitcoin moves down to about the $19,750 level of support here, you can see it a little clearer on the 4-hour time frame. We have multiple touches on that support level, and I think that is more likely where we're going to be moving. On the 4-hour here, we are also seeing trend exhaustion much higher and price versus whale money flow much higher on its respective charts. But on the 1-day time frame, we could see a little bit of a move up, but overall we are on our way down more than likely. Again, this assumes that whales are done with their crazy bullish sentiment. They're done pumping money into the market. They have slowed down, so unless they decide to do it again, I don't think we're going to see any more moves up. More than likely down to 19,750. Now, if we see that, this will very, very easily push ADA Cardano back down to structure support. It is now structure support on this descending channel, down around 35 cents here. Now, I'm giving it about a week here. Whale traders could still have some bullish sentiment, but overall, if Bitcoin drops to that $19,750 level, it would very easily push ADA down to 35 cents to meet this structure support. On the 1-day time frame, trend exhaustion and price versus whale money flow are pretty high for ADA, and on the 4-hour time frame they are even higher here. Checking out these macro metrics again, Bitcoin is in excited territory. You can see whenever it did reach previously in the excited territory, Bitcoin saw moves down. It happened extremely consistently right here, right here, right here, right here. You can see just multiple over and over again moves down happen when we reach excited territory. Same goes for Ethereum. In fact, it was reaching greedy territory, and every time it happened, it saw moves down. Because of this, we can expect after this greedy move, we are likely to see it move down again. Whales are also seeing massive short sentiment after this big move up. Typically, as the price moves up, whales are more more and more likely to begin shorting. This orange bar here for Bitcoin and Ethereum right here show the largest shorting sentiment that we have seen in months. I think it's very likely we will see market moves down soon because of that. With that, ADA again could see that support structure at 35 cents on the descending channel original resistance and is now turned support. There you have it, guys. I wanted to make a follow-up on that 33-cent call for ADA Cardano, showing what happened, what we learned, and what we're going to be doing differently in the future to make sure we are giving the best trades possible. Overall, we're seeing generally bearish sentiment at this point after the massive market pump. The market saw about $47 billion into the market with over 700 million liquidated in shorts, which just further served to push the price up. And with that bullish sentiment running out, as long as whales don't decide to keep pumping the market out of nowhere, I think it's very likely over the weekend we're going to see some selling pressure as more and more people take profits at this level. For Bitcoin, I think that support level could be reached and tested at 19,750. And for ADA, I think we could see 35 cents. But again, we will keep everyone updated. That 35 cents is worst case scenario, though. That is just the next structure support. So we will be keeping everyone updated no matter what. With that, guys, thank you so much for watching. If you enjoyed this video, please like and subscribe for more crypto content, education, and analysis every single weekday. Remember, trade safe, trade confident, and I'll see you in the next video.